Okay, so today we had, you provided a great Greenstone update. I remember when I went to site in September, I was very impressed with what you guys have done. Maybe just a recap on how things are going, overall progress, and then I guess more importantly, is there anything that kind of keeps you up at night? Is there supply chain issues or something you're waiting for that could cause a delay? Let's just get an overall Greenstone update.
Sure. This is on. Everyone can hear me. We put in an update this morning. I think it kind of conveys the story that things are going well at the Greenstone build. That doesn't mean it hasn't had its own challenges as we've progressed through construction, but the team there has been able to keep us on budget, on schedule, and things are looking really good for our first gold pour in the first half of next year. So a year from now, we should be in that hot commissioning or just starting hot commissioning. So good shape from a schedule perspective, good shape from a budget perspective. As to what's keeping me up at night, the big push, certainly over the winter and really going forward, is on productivity of the installation crews. So we're doing mechanical installation, piping, electrical. The big push for year end was to get the buildings enclosed and heated, so that these guys will be working inside in a heated building instead of in the freezing cold of Northern Ontario. We were successful in doing that, and so that has a big difference in productivity over the winter. But maintaining that productivity, through the rest of the build, but really, especially over these next 6 months, is critical.
Okay, and then it is a pretty pricey build. You know what I mean? It's $1.2 billion on your fees. Myself, other analysts are calling for cost overruns. Maybe just kind of remind us where your balance sheet is. You did announce an ATM financing in December. You have sold some Solaris shares. If you had to do more money, what approach would you guys take? Is it selling more of your investments? You got $200+ million there. Is it selling a stream? Is it an asset sale? What would be the venue if you needed more money?
Yeah, I guess just backing up. I mean, when we started construction, and this was October 2021, we put out our budget, $1.23 billion US. That budget was based on 85% detailed engineering having been complete. We had already spent about $50 million in pre-construction costs, making sure the long lead items had been ordered. We had a view on inflation, or at least enough uncertainty on inflation to significantly increase our contingency. And so, we were coming from, I think, a place of relative conservatism when we launched. And in the summer of 2022, we did have a third party kind of come in and revalidate what we're doing, and we're going to do that again actually in the spring. And so I guess the point I'm trying to make is that from a management perspective, we're very comfortable with the capital budget that we've put out into the market and that we are building against and what we're being evaluated against. And so we're now 55% total through that budget. 60% is attributable to us. Greenstone is a 60-40 joint venture with Orion Mine Finance. And so roughly that's $330. If you put some AP in there, maybe it's $350, let's just say, remaining for Equinox. We finished the year with $200 million in cash. We still have $130 thereabouts available under our revolving credit facility. There's a $100 million accordion feature on that facility as well. So combined, that's $430 million thereabouts. We have cash flow from operations, and I think gold hit $940 just before we came up here, or $1940, and at $1940, the cash flow profile is very different than at $1650, which was 4 months ago or so. And so that obviously helps. And then we have what I would call other levers we can pull. We have a $100 million ATM facility that's available to us. We do have a portfolio of equities that we could liquidate if we needed to, and then we have a portfolio of assets if we really wanted to start rationalizing the portfolio over this time. But right now, it's cash on hand, cash flow from operations, amounts available under our credit facility is what we intend on using on the way through. And if we do anything else, it'll be opportunistic and I would call it risk reduction or risk management rather than indications of us going over, I guess is the other point I want to make clear. We're not in a position where we think that's going to happen.
Okay. And we were talking about it before we came up, just you guys are a levered plate of gold, high beta. So the gold price is going up. You guys are up over 30% this year. And the down market's a down market. Some people some other producers who, when they're building a big project, elect to kind of hedge the gold price on there. Now, to be fair, sometimes it's a credit facility, a bank that requires it. You have no requirements in. Would you guys consider hedging? Do you guys like the lever aspect?
Well, I think long term, obviously, we like the leveraged aspect of gold, and I want to keep, and we want to keep that upside. There is nothing wrong with some downside risk protection. So, how would we do it? I think some other companies have done 20% of their next year and a half's production. You can do a cashless collar. I wouldn't rule it out. I mean, it's something we could do. You could protect a fair bit of margin and EBITDA. And, at $1,650, we're looking at it and going, okay, we got some work to do here to make sure that we're financed all the way through. It's a very different story at $1,940. But we all know how volatile the gold market can be. So I wouldn't say we'd never do it. Long term, we're a company that doesn't like to hedge. We actually just rolled off a bunch of hedges that we inherited when we acquired Leagold, and we were pretty happy to be on them. But for a short-term period while we're building Greenstone, especially with the way gold is run, it could be a prudent thing to do.
Okay. And then maybe it's like people who didn't follow Equinox when you first formed, when you first bought Mesquite, you guys got a partner in Mubadala who did a convert with you guys. Maybe just speak to the relationship you have with them. You've got their converts come due, I think, in 24, 2025, right when Greenstone comes online. So it's kind of the balance sheet might be a little bit tight at that point, depending on production and everything else. So maybe just speak to the relationship you have with them.
Well, we have a great relationship with them. They're on the board. They've participated in 2 consecutive convertible notes when we've gone to issue them at progressively higher prices. We have no intention of paying cash out on that convert next April or in a year. I think that either with Mubadala, we would look to extend that or term that note out. We could today I could issue a brand new note that would actually issue less shares than under that note and park the cash and then just pay it off in cash if it wasn't in the money in a year from now. But at this stage, we don't have a sense of urgency. We have a good relationship with them, and they've been supportive all the way through. So, at the end of the day, I think the message is that convert that comes due in April, it's $160 million total. Is not one that we intend on paying out in cash just as we're ramping up Greenstone. We would term that out.
Okay. So just switching gears, you have 7 producing mines, 4 growth projects. Let's just switch to Los Filos. Issues have largely been solved. Maybe just what's going on at Los Filos these days. I know an agreement was more or less agreed upon, and things are operating well, but you're waiting to do the expansion. Now, part of that is the Greenstone spend and whatnot. Just maybe a general update on what's going on in Los Filos.
Yeah, Los Filos has been a challenge for us. We acquired that mine, and no sooner did we close the acquisition, it was closed because of COVID, and then we had some social issues, and we were blockaded for I think the first 9 months we owned it, we couldn't even operate it. Since that time, we've been trying to, play catch up, right, on the development of the Guadalupe open pit and on Bermejal. And I think the message at Filos is we can do better on the operating side, and we need to be, and we are focused on improving the operations at Filos. That includes productivity on the development, in particular of Bermejal. That's an area that we really need to improve on. And we also need to get a better handle and a better feel for the local communities and the situation there, and make sure that as we advance that project and potentially expand that project and invest in that project, that we have that social license to allow us to operate, right? And so it's a huge focus of the company right now in 2023, looking at options or opportunities to enhance the operation. Our costs have just been too high at Filos, and we need to do better. And then advancing the project to that point and developing that plan to get to where we're comfortable making that investment. Now, you're right. With Greenstone going on right now, we have to choose where we allocate our capital. Once Greenstone's complete, Castle Mountain could be sitting there as a permitted option. That's something we're working on in real time. And if we can get that permit, mid next year, that's also going to be an area where I think it's going to be an attractive place for us to be deploying capital. So right now, Filos' immediate focus is improving the operation itself. And as we do that, over time, we will start to, I think, to firm up the exact timing of when we would start to look at that expansion.
Okay, so you mentioned Castle Mountain. That's another growth project. We're waiting for the permitting status. For people, again, Newcastle, when it was Newcastle before Equinox got big, that was the growth project at the end of the day. Maybe just an update on permitting. Can you remind people, have they found enough water there? Mm-hmm. What's the status there? Again, we need the permit. It's not going to get spent until Greenstone's done, but maybe just Castle Mountain Phase 2 update.
Yeah, again, big project, over 200,000 ounces a year once we do that expansion. So it is a priority for us to get it permitted and ready for that build. It's operating today as a much smaller operation, around 25 to 35,000 ounces a year. And really that's to maintain our permits and to get it ready for when we do that expansion. We submitted the permit applications for the expansion in March of last year. We've received the confirmation of completeness and acceptance by both the state and the county regulators. We're just waiting on the BLM, and that should happen any day. And once that happens, that kicks off the actual permitting process, right, in California. And right now, our timing is, and I'll say, give or take 6 months. I mean, this is not an exact science here, but by mid-2024, we'd like to be in a position where we've got that permit and we could start to advance that expansion. And that would be perfect for us because that would be just as Greenstone's coming into production, and then we can really start to hit Castle Mountain hard. And in the meantime, by virtue of how advanced we were on engineering when we started Greenstone, we want to do the same thing on Castle. So in the background here, we're starting to put a lot more effort into the more detailed engineering aspect of that project. We are doing some trade-offs on certain aspects of the processing flow sheet, but ultimately, by the time we announce construction on that, we want to be, as advanced on engineering as we can be, and hopefully have a similar sort of experience that we've been having on Greenstone.
Okay. So moving to Brazil, you've got a bunch of smaller mines there. We'll start with Aurizona. Can you remind us when, on the underground portion, when are we going to get an updated feasibility study? And just generally on current operations and future, rainy season there is very difficult, very challenging. Can you just name some stuff you're doing to kind of make it a little bit easier to operate, given the challenges we see due to weather?
Well, I'll answer the second question first. And yes, the rainy season at Aurizona can be an extremely challenging environment to operate in. And it really did catch us last year. And in previous years, the way we manage it is we try and have a big stockpile sitting at the crusher so that when the rainy season comes and the productivity in the mine plummets, we're able to draw from that stockpile, mitigate that lack of ore coming out of the pit. And then once the rainy season ends, we hit the mining hard, rebuild the stockpile. And that's often why you see production at Aurizona kind of weak in the first and second quarters and then ramp up sort of in Q3 and Q4. Last year, we had a couple of things. We had a longer rainy season, and we had a smaller stockpile at the beginning and lower grade. And we ended up going through basically all of it, and we didn't get into the mining into the mining as quickly as we normally would have. And even when we did, it took us too long to kind of ramp up the capacity of the fleet to catch up kind of from where we got left with that rainy season. And I mean, I could show you graphs. It was kind of a bizarre rainy season. It really did extend quite a lot longer than what would be typical. But we don't want that to happen again. So what we've done in Q4, significantly increased the fleet, advanced waste stripping significantly, also increased the stockpile that we had at year end. And we've been lucky because the rain kind of held off. So we've been able to keep up that rate of mining. The rain will come, and at that point, we'll have to drop a stockpile. We are looking at bringing some more articulated trucks to Aurizona, which will enhance our ability to mine in the wet season. But at this stage, what we did is just really hit the mining hard while we could and rebuild that stockpile. And that's really the key there, is making sure you've got that resiliency in your feed so that if the rain does persist, you've got enough there at a reasonable enough grade to maintain that production, and then having the capacity to mine when you can and rebuild it in time. And we just got caught short in 2022 and to the tune of like 30,000 ounces. So it was a meaningful hit last year, and we don't want that to happen again.
Okay.
Second question, or the first question on the feasibility study, I think the pre-fees came out in 2021, late 2021. Since that time, we've been advancing it and have done more drilling. That'll come out in the feasibility study. That'll come out sometime in 2023. I'll say Q3. I don't think it'll be Q4, but I also don't think it'll be Q2. So sometime this year. Late this year, we'll have advanced in the area of the pit far enough where we actually can start development of the first decline. And we have permits for 3 initially exploration declines to go underground. And we'll make that decision later this year, but that's what we're shooting for, is being in a position where we can start that development kind of late this year and in 2024 kind of wrap that up.
Okay. So just we'll move to, I guess, Santa Luz. I went to site in October. That almost done construction. The plan, 100,000 ounces a year, almost 10-year mine life, probably gets extended, but we don't need to go into details on resident in leaching and how it's a new process, a little bit more challenging. But you mentioned in your Q4 results, recoveries are still an issue. Maybe just speak to what you guys are doing to try to improve that and what's going on the recovery front there.
It's been complicated and challenging. We did a lot of testing. We had a pilot plant, which you saw. Yep. Great results. Ramping that up to industrial scale has been far more complicated and challenging than we anticipated. Over Q4, twice, I'm going to use the word poison because I don't have a better word for it, but basically poisoned the circuit in the resin and leach circuit and had to clear it all out. And when you do that, the recoveries plummet and it takes a while to get back. So we lost chunks of production in Q4 at Santa Luz that kind of hit us at the end of the year. We're trying to avoid doing that. We're learning a lot as we do this. Part of it is blending and making sure that the ore that we're putting through the plant doesn't have too much organic carbon compared to the grade, and that ratio is important. But there's also other things that the nature of the ore, whether there's arsenic, how much sulfide is in it. It's like almost a chemistry experiment sometimes. So right now we're trying to stabilize recovery at 70+%. And then we can start to incrementally try and build from there. Being realistic, I think 80% is going to be a challenge based on what we're seeing right now at Santa Luz, which is obviously disappointing compared to what we planned. But there's still a good, profitable mine plan there if we can maintain that recovery north of 70. So that's what we're shooting for in the near term, and it's taken longer than we hoped, but they are making progress, and I think hopefully in the next quarter or two we can come back and say, okay, here's where Santa Luz is, and this is what we think going forward. Okay.
So I guess just lastly, instead of just going asset specific, to grow this company, you guys did a lot of M&A. We talked quickly, maybe a small divestiture if the opportunity is right. You don't need the money, so maybe that doesn't happen. But what are your thoughts on M&A? Are you guys still looking to buy? Are you happy with your overall growth projects? Is the option to buy Greenstone as soon as it's built from Orion, if that's the case? And I guess if Greenstone is an option, do you have a right of first refusal, or can Orion maybe get rid of it before?
Yeah, I guess the easy answer is that we've always been kind of opportunistic on the sell side. If there's been a good deal and we think makes sense, we've been willing to do that. I guess the same can be said on the buy side. Again, we're opportunistic. If we see a good deal, and Greenstone via that acquisition of Premier for us, I think was a fantastic deal. And so, yes, the answer is we do have a ROFR on Orion's interest in Greenstone. I think it's fair to say that interest would be our number one M&A target sometime in the next several years. That would obviously need to be negotiated, but we love the project. We love having 60%. We'd love to have 100% at some point. We'd like to make that happen. But that's going to be a discussion with Orion when the time comes. They 100% know that we're the natural buyer and ultimately want to sell to us too. This is not contentious in any way. So it'll come down to price and our ability to pay and what makes sense at the time.
Okay. That's awesome. Well, thanks so much, Greg.
All right. Thanks for having me.